So let's start with Boeing. I think you were able to hear everything Phil said. So the numbers are one thing, the layoffs another. What do you think?
Yeah, not a surprise about the layoffs. I mean, the commercial aviation business is just in a world of hurt. Look at GE, look at Raytheon. Commercial OEs for their businesses were down 45–50%. The aftermarket business is down 50%. So this is not surprising. I will say on the positive side, from an investor point of view, the liquidity of $27 billion is very encouraging, and the production rate, no change there, also very encouraging. But, you know, I don't think earnings really matter for this company. It's all about the 737 MAX. And as Phil just said, looks like it's going to get back up in the air in the next couple of months. And we got very good reviews from the European regulators. They're saying they're deeming it safe. The FAA chief flew the plane twice, the 737 MAX twice, and said very positive things. So I think they're making progress there. And in the meantime, they've got to cut costs, because the overall environment still is really challenging.
They do have the liquidity that you point out. Maybe that's one thing. And then, you know, they have a defense business that is not, you know, worth zero on top of everything else. What do you estimate that's worth?
Yeah, I mean, I think the defense business is worth about $80 to $90 a share. And it's sort of interesting. Back in March, when the stock fell to its lows, it got to 91. So it got to around that level. And it is a good business. It doesn't get the credit, I don't think, in terms of the operations and the efficiencies and that sort of thing and the relationships. But it is a good business. And overall, they're going to get that. They'll get through this. It's just going to take time. And you have to have patience. The stock is down 51% year to date. I mean, I still think it is a buy here, especially in front of the 737 MAX.
GE reported, you referenced it earlier, along with Raytheon in light of the Boeing news. I mean, can you imagine being GE and then the pandemic hits? I mean, can you even? It's unbelievable, right? But you still think at $7, it's a long-term hold based on confidence in Cope?
Absolutely. I mean, turnarounds take time, right? And I think this quarter they definitely showed progress. They had sequential revenue improvement, sequential operating margin improvement, and most importantly, industrial free cash flow of $500 million was better than the $1 billion burn rate that people were expecting. So aviation actually turned a profit, which is interesting, right? Power did as well. Renewables did as well. So I think there's a lot to be encouraged by. I'm most encouraged by the debt reduction. So year to date, they've now lowered debt by $11.5 billion, $2.6 billion in the quarter itself. So Culp is doing everything he can. Absolutely, they are making progress, and they made progress before the pandemic. And then the pandemic hit, and obviously they have a lot of issues. But I think they're going to slowly make themselves a better company, and they'll get out of this as well. So these are two turnaround stories. They're hard. They're not easy. They're hard stocks to own, but you have to have patience, and I think they do provide some value here.
Shepard Smith here. Thanks for watching CNBC on YouTube.